Hi, folks. This is Dan Bird. It's Sunday, April 30th, one day before we start the month of May. And I want to talk about the market. And this might not be a very convincing video because there are conflicting signals. But I want to talk about all of them, and you can make up your mind which way you want to go, or if you want to do anything at all. In the second session, we'll talk about the old adage, go away in May. We'll see if that holds up. I had actually a subscriber ask me about it to talk about sell in May and go away. And we'll see, what the market has done in May and the next 6 months, basically. That'll be the next session. So let me share my screen and I'll start showing you some things that probably I will get some flack for, which is fine, no problem, because there are some very positive signs in the market, and there are also some signs that we might be getting close to an exhaustion point, and there's no way to know which way it's going to go. So if we look at the S&P right now, S&P actually looks pretty good, and it's broken out of this one resistance level right here on Friday after a few very convincing down days, but just touched on the 50-day moving average and then took off. So the next convincing level is 4,200. And it's easier to see on this chart, which is the longer term weekly chart. And as I said a few weeks ago, when we get to this shaded area, we're going to hit a lot of resistance, a lot of congestion in here. There will be a lot of folks that think that they should go short in this area. But we are making some pretty good progress, even with some pretty significant down days last week. You can see what that last week's candle looks like. You can see how it sold off, but it came back and actually ended at the highs on the week. So 4,200 is the next level we have to get through. But with all of these up days, we've had a really good rally. And rallies like that don't continue forever. They will have a period of retracement where it will come back. I don't know when that will be. I don't know if it'll break through 4,200 and take off, or it might go up and hit 4,200 and then start to retrace. We'll just have to see. Like I said, folks probably aren't going to like what I have to say today because I just don't know which way it's going to go. But there are some positive signs, and there's some positive areas as well. This is the NASDAQ. Again, the NASDAQ also broke out. Actually, it's the NASDAQ 100, so it's the biggest tech stocks. NASDAQ 100 broke out on Friday. So the next level is up here around 13,600. So again, it may continue and hit that and then start to retrace. The one positive sign is the amount of volume that came in on those last 3 days. Big up days. All of the indicators are implying more upside movement. So this one might actually have more life in it. One of the things on the NASDAQ that really needs to participate are the semiconductors, which I'm going to talk about here in a second. Take a look at the VIX. The VIX, unbelievable. It's below 16 now. So it closed at 15.78. So the VIX is now below 16. That's very positive, very bullish normally. You can see the S&P is beginning to take off, and the 10-year Treasury yield is just moving sideways, just hugging on to that 3.5% line. So all of that, again, is very positive, very bullish for the market. The question is, will it continue? Well, we're going to find out next week. Before I get to some of the other sectors, I want to touch on, because I know there's lots of real estate folks on this channel. So I want to touch on this. I look at it every couple of months, usually. This is the Case-Shiller report put into a chart, and it goes back roughly 20 years. So it's interesting because a couple of things that I'll point out here. First of all, back here during the financial crisis, the black line here is the Case-Shiller line. Right now it's at 300,000, average. And back here in 2006, it was at 200, roughly 200,000. But you can see here where in 2006, it peaked at about 8% above its 21-day moving average. And then it sort of leveled off right here in the circle. And if we compare that to where we are today, the circle up here, it seems to be kind of leveling off again. So the question is it going to do the same thing? Is it going to level off for roughly 9 months and then plunge all the way down? I don't think that it will, but we'll see. It's beginning to look very similar to the way it looked in 2006. Now, what I did was I put these red and green lines where the actual Price-Shiller price crossed the 21-day moving average. And if you would took that as the peak and sold the house in May 2007, and then just stayed out of the market until it crossed back above it again down here, that's a 5-year period out of the market before getting back in again. That's 5 years of picking up probably some pretty good deals, especially if they're rentals, and letting the rentals pay your mortgage as you wait this part out and then go in very aggressively when it starts to climb again. The other point to notice here is as it's beginning to climb, it has a nice steady climb from basically 2012 all the way to just after the pandemic. And then it took off and went parabolic. Parabolic is never a good thing. It's great while it lasts, but it usually never lasts. So the question now is it going to plunge like it did back in 2006, or will it just go sideways? And at some point, this line will cross a 21-day moving average, but rather than plunging and having a parabolic move down like it did back here, it could very easily just move sideways. So the 21-day catches up to it and they both meet right in there, which is what I think is going to happen. The other thing to notice is where the mortgage rates, 30-year mortgage rates were in 2006, up here at about 6.85 roughly, 6.8 or so. And the peak that it hit here was about 7.1. And you can see how it's dropped precipitously since that peak. And right now it's down, probably right down to where it started to decline during the financial crisis. So mortgage rates are roughly equal to where they were back in 2006. So we'll see what happens. These gray areas are the recessions. And the gray dash line here is the Fed rate. The other interesting point is the Fed rate back here was way up here, pretty high. I think this was 5.7 or 5.8% up here. Right now we're sitting right about here. We're probably going to have another rate hike next week, May 3rd. And then, but the important thing to notice is look how long the Fed let it just sit there and plateau. That's almost a year. Well, actually a little more than a year, that the rates did not come down. It just sat there at the same rate for quite a long time. And then also notice that the recession didn't occur until rates started to drop, okay, which happened right after the housing crisis really began. In 2020, during the COVID crash, again, rate hikes plateaued, this time for about 6 months. And then they started to decline, but they declined before the recession took place. So I think what the Fed is probably going to say is that they're going to have one more rate hike and then they're going to level it off and keep it there for quite a long time. Will it be 6 months like this one, or will it be a year like this one? Who knows? But typically recessions don't occur until the Fed starts dropping rates. Excuse me. So as they start coming down, that's when the recession occurs. So I thought this was just an interesting chart for those real estate folks out there. Also, if you had sold at the peak over here and then waited, or if you had got in at the peak and then everything crashed and you waited to get back to equal, then you would have waited 12 years before you got back to normal again. For a rental property, that's okay. You actually could make money and pay off your mortgage in that 12 years. So that might actually be a good thing. The last thing to look at is wages. So wages had been going up and then they leveled off right here. And now they've started to increase once again. They were basically going up back here, and then they declined a little bit, but kept on moving higher, except during the recession. The recession, they went down slightly. So interesting stuff. Take it for what you will. A couple of industry groups that I think are really interesting. One is communications. This is where the internet stocks are, like Meta. And this particular view is a daily view. I put this in my newsletter, by the way. Let me show you that real quick. I always forget to do this when Zuber's not on the call, because I'm most interested in talking about some of the things that I'm seeing rather than pushing the newsletter. But if you're interested, I send this out every Saturday and Sunday. It's got some interesting cartoons. Last week, I talked about these 4 stocks: Meta, Microsoft, Amazon, and Google. And I ranked them basically in this order, saying that Meta would be the best one. Microsoft would also be very good. Amazon would be okay. And Google probably would be the worst of the 4. As it turned out, Google was basically okay. Amazon ended up being the worst. The other 2, just like I thought they would, ended up doing really well. And that was based on the relative chart, the relative of how they were doing versus their peers in their own industry. And then the communications sector down below is what I'm going to talk about here in a second. But if you're interested in getting my newsletter, just send me an email to breakpointtrading@gmail.com. And I'll send you last week's newsletter and then put you on the list. So I talked about this in the newsletter. I actually put a link in there that talked about what this pattern looks like. This is called a cup and handle. This is something that William O'Neill from Investors Business Daily, it's one of IBD's favorite patterns. That when it breaks out of this pattern, it usually will duplicate the distance from the bottom of the cup to the neckline right here. Right now, that's 52 to 60, so that's 8 points. So the potential target of a breakout here is 68 on the XLC. This is the sector for communications where the internet stocks are. Now, this is a daily chart. If we look at this on a weekly chart, longer term, you can see on the right here, you can see that, again, a bigger, wider cup and handle. But now on the left-hand side, there is kind of a mirror image of that cup and handle. And this is called an inverted head and shoulders. I also put a link in the newsletter explaining what this means and how traders trade it. The way to calculate the target in this case, if it breaks out, and by the way, it's right at the 200-week moving average here as well. But if it breaks out next week with volume, and it had pretty good volume last week, but if it breaks out here, the distance is the distance from the bottom of the head, which is 45, to the neckline right here, which is about 60, which gives it a target of about 75. So that's about 15 points, or roughly 22% if this breaks out. So something to keep in mind, both of those patterns are very bullish, the daily pattern and the weekly pattern. So if that happens and it continues higher, it's going to probably will carry the market, actually, just like Meta did. When Meta started to take off, the whole market took off. So this is the chart for Meta as of last week, and you can see it had a big gap up. Had a big gap up after earnings the last time as well. So it's kind of has a trend of doing that. If you look at this, and you can kind of see a little cup and handle right there, just like I explained before, and then it continued higher. So we'll see what happens. But Meta is one that is leading this group higher. Google is also in this group. The last thing I want to talk about is semiconductors. So for the market to really make a significant advance, the semiconductors need to participate. And they have had a significant downtrend in the last month or so. You can kind of see it here. They're trading within this channel, but they've come off the top of the channel and come back down to about the middle of the channel, hitting right about at the 50% line, anchored between the top and the bottom of this chart. We look at a closer view of this on a daily chart. We can see here there's the same channel right there. and it just started to make a move. It showed a hammer, which is this candle right here. A hammer is very bullish, especially when it's at the bottom of a trend. It means that traders started off the day selling and then ended the day buying all the way at the top, pushing it much higher. And the next day confirmed it. So this is Friday. So Friday confirmed that bullish handle. And it's sitting right now, the semiconductor stocks is sitting right at the 21-day moving average. So again, if this continues higher and semiconductors start to really gain some life, then this could be very bullish for the market in general, especially for the NASDAQ. And you can see the volume here as well was very good. So let's take a look at a couple of these that are critical, not only in the semiconductor space, but for the market in general. So this is AMD. AMD reports on Tuesday. So this is called a bullish flag. Whenever a stock has an uptrend like this, and then it pulls back, especially when the volume is very high on the uptrend, and then volume kind of dries up on the downtrend, which is exactly what's happening right here. So even though the stock has been falling, it's been trading within this channel all the way down, and it just reached the top of the channel on Friday. It also went up and touched the 21-day moving average before pulling back a little bit. Again, they report on Tuesday. So I don't like to buy into a stock just before earnings, because earnings are binary. It could scream higher or lower, either way. But if you wanted to take some risk and buy a small position, you could buy a very small position on Monday if it breaks out of this 21-day moving average. Probably wait till later in the day to make sure it holds and it's going to close above that, and then see what happens with earnings. But this is looking very, very bullish. The other stock that's important in semiconductors is NVIDIA. Now, NVIDIA doesn't report for about 3 more weeks, May 24th, I believe. So in this case, NVIDIA has had a really good trend upwards, and now it's been just trading sideways. This is a classic Darvas box. For those of you who have studied Nicholas Darvas, and in my newsletter, there's a book recommendation at the bottom. But this is what he typically would trade. He would wait for a stock to create a box like this, and then as soon as it moves out of the top of the box with volume, and you can see again, on the uptrend move, the volume was very good, very positive, very high. It's above the average, which is this blue line. And on the sideways move right here, volume has kind of dried up. So again, that's very bullish. If this breaks through this upper boundary right here, especially with good volume, then this might be a good one to buy before earnings. This is 3 weeks away, and then make a decision before the earnings what you might want to do, but not until it breaks out with volume right there. Both of those are very important, not only for semiconductors, but also important for the whole market. So here are a whole bunch of semiconductor stocks that I put together, and the way these are viewed is they're in alphabetical order, but the blue is how they are doing versus their peers. And then the price action is the next one. The next panel is the accumulation distribution line. So are the big institutions accumulating this one, or are they distributing? Like this one over here, LSCC, which is typically has been a pretty strong semiconductor stock, but it's not looking too good right now. And then the bottom one is the momentum indicator. What's the momentum doing? Is it obviously it's been moving down for most of these stocks, but is it about to start to move up again? So if we look at these very quickly, the ones that I would pick out, just looking at how they do against their peers and looking at the accumulation distribution line, ACLS looks very positive. This one, not so much. AMAT, Applied Materials, looks okay for accumulation distribution, but not for versus its peers. AMD looks really good. Look at the accumulation distribution just starting to move higher. This one, not so much. AOSL, these all are LSCC looks like the worst one. Marvell, accumulation distribution again looks really good. Looks like it's trying to make a turn off the bottom. Micron looks really good. Micron's breaking out above significant resistance right here and doing well against its peers and really well on accumulation distribution. NVIDIA is the best one of the group. Look at that view versus its peers. It is the strongest semiconductor versus all of its peers. Its price movement, again, I just pointed that out, has gone sideways. So it may be getting ready to really make a move higher. And accumulation distribution is great. ONN, accumulation distribution looks pretty good, but not versus its peers. Qualcomm, average. SWKS, accumulation looks pretty good, but the other ones don't look so great. So of all these, I would pick ACLS, AMD, and NVIDIA, of course, and Micron as the key ones to watch. Finally, if you don't want to try to pick a particular stock and you want to try to trade all of the semiconductors, then one way to do that is with SOXL. This is a 3X ETF. So this is a leveraged ETF. I will caution you that leveraged ETFs can be dangerous because if it goes up 3 times. The return is 3X, but if it goes down, the loss is also 3X. So the way to play these is if you think the move is going to be higher and you don't want to pick a particular individual stock, you can play the ETF, but put a stop in. In this case, it's just getting above its 200-day moving average. So if you were to buy this above 14, for instance, or if you were to wait for it to go through the 21-day at 15, then put a stop down here just below 14 to make sure you're not in it if it turns around and goes down again. But if these do take off, then there's a potential for 3X. Now, I'm not making any recommendations here. I'm not a financial planner. These are just ideas and education more than anything. So take that for what it is. Again, if you're interested in my newsletter, I've got a lot of this stuff has been in there. And in fact, I explain it in even more detail. Just send me an email to breakpointtrading@gmail.com, and I'd be happy to add you to the list. So that was pretty quick for today. Zuber is in Las Vegas. Not sure what he's doing there. Maybe he's got a session with you guys even. But he's not here today. Hopefully we'll be back next week. I'm going to do another session on the sell in May and go away and see what has happened with the market. So stay tuned for that. Thanks for joining. Again, breakpointtrading@gmail.com if you're interested in the newsletter. Take care.